Welcome back. Well, as the entire country continues to face economic uncertainty, volatile market conditions and higher costs are affecting the retail space, where some companies might not be able to balance these pressures. And our next guest says this could provide opportunities for some savvy shoppers. Let's bring in Lynn Whitmore, Wells Fargo's managing director. Lynn, great to have you on the program. Just to kind of take a step back here, my understanding is that you're in the business of kind of working with retailers on commercial loans here. I mean, talk to me about the liquidity that you're seeing among your clients. Are they tapping their lines of credit more actively now that you have some of these worries about what the economy is going to look like in 6 to 12 months?
Thanks, Brian. It's great to be here. And you're right. I think this era of uncertainty is really causing retailers to take a hard look at how they're bringing in goods, how they're talking to their consumers and responding to some of the headwinds we're seeing in the capital markets. We saw record levels of liquidity coming out of the pandemic as retailers all but stopped their capital expenditures. And then the shoppers really came back more quickly than some anticipated. And that sort of flipped with higher inflation, sort of the fixed cost of having to bring goods to market. Those retailers are really already feeling a pinch before they even get to the goods to the stores. So we are seeing higher levels of utilization. It doesn't necessarily point to a decline in the overall health of the retail industry, but it does show they're facing that same economic uncertainty, volatility, and sort of the uncertain and higher cost market conditions that we all are.
So what do you see a lot of these companies deploying that line of credit for? Are they deploying it at all? Or just kind of holding on to it on their balance sheet? Or are they using it to kind of manage inventory? We've heard the anecdotes from the likes of Walmart and Target recently about how it's just a real challenge right now trying to get ahead of what consumer activity is going to look like in the near term.
It is definitely difficult. We are seeing the consumers, the customers ourselves turning and tapping sometimes into their own credit lines, which obviously in a rising rate environment can be fairly expensive and another consideration on top of inflation. For the retailers, their lines of credit are really there and have always been there to finance their working capital. So for them, it's sort of normal course, but we're seeing it accelerated to earlier in the year to build for holiday, to higher levels maybe than we saw in 2021 for the same reason, to cover the expense, the higher costs, and frankly, because some of the other capital markets activity that they would have probably taken advantage of, whether it be institutional term loans or bonds, has been either more expensive or very difficult to access. So it's sort of a great insurance policy, if you will. I wouldn't say that retailers are parking cash on their balance sheets. I think they themselves are very savvy, but they're using it smartly as a still competitive capital tool to finance their investment activity.
So this is really interesting because, my understanding was that a lot of the liquidity that was made available by emergency venues such as the Federal Reserve, from stimulus from the government itself over the course of 2020 actually allowed a lot of companies, retail or other sectors, to really shore up their balance sheets. So is this kind of the beginning of the post-COVID cycle of reshoring the balance sheet ahead of what's ever next? Or is this just companies that are looking at the 10-year yield that dipped down, over the last 2 months and saying, maybe now is the time to take advantage of that?
Yeah, I think it's a little hard to predict, and what makes it so challenging is that pre-pandemic, we really had what we were calling the era of the have and the have-nots. You could separate out the winners and the strugglers. Now it's very unpredictable and uncertain. So I think you're going to see retailers really repositioning what had been healthy balance sheets, but what they're seeing is an impact to their top lines, and they're using their lines of credit to think about how they're bringing in goods differently, to potentially overcome supply chain issues, to really think about smarter ways to look at their balance sheet in a time when they normally would have otherwise gone to capital markets and done very different things. So I don't know that we're seeing it as a trend that will continue or will ultimately focus us on more distress in the sector, but I think leading into the holiday, it'll be very interesting to see how top line does translate for the various retail sectors.
Well, we'll have to see how retail sales show the health of the American consumer in the months to come. That, imagine, folds into that narrative as well. Lynn Whitmore, Wells Fargo's managing director, thanks so much for the time. Appreciate it.